Hello everyone and welcome back to the Innovation Markets Forex course lesson number 3. Now today we're going to be looking at something that's so important in trading and something that I've shown hundreds of students and members previously, and when I've got such great feedback and everyone's told me it's changed their trading, and something so simple has now become so obvious and it's just changed their trading and the way they look at the charts. So I'm really excited to actually show you today's episode. There's some really good gems in here that you'll take away from this, and it will change your trading. So getting straight into it, I'm starting with our normal chart, GBP USD. We've used this chart for lesson number 1 and lesson number 2, so I'm going to stick with it so far for lesson number 3. And just quickly before I delve into market structure, which is what today's lesson is all about, but also still entwined with the Forex course lesson number 2, which was about trend lines, because they go hand in hand with each other. I'm going to show you today that there's a reason why they've come one after the other, Forex lesson number 2 and number 3, because trend lines and market structure are entwined and they're very important. And as I said, one of the things that I'm going to show you, which is so important, that many people don't realize, is actually very much to do with that particular topic of trend line and market structure combined. So I'm going to show you that shortly. Firstly, I'm going to just start off with our daily chart on GBP USD, because I want to show you something that if you had been watching lesson number 1 and lesson number 2, but particularly number 1, where we've done top-down analysis and we've done support and resistance, it could have really helped you if you're trading GBP USD. Now, if you're learning, I also want to show you so you can understand. You can go back to lesson number 1 and number 2 and understand what we're talking about on those episodes or lessons, and see how it has transpired already into lesson number 3. Now, lesson number 3, each of these lessons is about a week or so in between, so we're letting the market actually play out in between lessons. So we're using live feed here, live trading, and we're almost saying what we expect to happen and show you how support and resistance works, how trend lines work. And then what we're seeing is we're following up with the next lesson, and price is playing out like what we're saying. So we can see that the support and resistance really works. We're not looking at old price action, but in some cases we are, but we're showing you up-to-date charts. Like this is today's daily candle. So we're showing you this is today's daily candle. All of this last previous price action hadn't happened yet, but we can see how well it respects everything that we're teaching you here and everything that we're showing you, from the support and resistance to the trend line so far. And now we're going to get into market structure. But as I said, I'm going to start off with my daily chart. You can see I've got some analysis down here on the right from this week's trading. I've got my daily chart here on the left. So I use this chart for my weekly, higher time frames, weekly, monthly and daily time frame. I use my bottom right screen here, which I can enlarge, for my lower time frame, which is 4 hour. And then when I'd want to drop down and look for entries and be really specific to get sniper entries and get in at the best possible place and get out at the best possible place for maximum profit and so on, I use this chart up here on the top right with 1 hour and lower time frame. So it really gets into what's happening in the last 15-30 minutes or 1 hour to try and get those entries. But we're going to get to that in future lessons. So I'm going to start off with my daily chart, and I just want to go, as I said, go over something that if you were watching lesson number 1 and you started trading, then you would have found it very useful, and you could have made some money from it potentially. So what I'm going to just show you here is we got the daily chart in front of us on GBP USD. We had this resistance here. We mapped out this level 1.3500 in the previous 2 lessons, and this was our monthly level. So know that the thick white line, I don't label it up which you can, but I don't like to label it up because I like to keep my charts as clean as possible to show me the candlesticks and exactly what I need to see. So a thick white line is monthly, a thin white line is weekly, and then the dotted lines in between are daily support and resistance levels. Now we understand that when you break support, break resistance, we expect price to come back and retest that support before going on to test the next resistance. Now here we can see that price has come up from a long time on GBP USD. Price hasn't been this high. We go back to the weekly chart. Price hasn't been this high since back in 2018. We're in 2020 now, at the end of 2020 at that. So a long time since price has been this high with the pound versus the US dollar. Now, what we are looking out for when we're breaking support and resistance is where is price going to go next. And here, if we look at it here, or if I drop down to the 4 hour even on this as well, we can see that price, for instance here, price was below, price broke up resistance, came back, retested as support. That is your buy. That's your buy trade. We'll talk about stop losses and stop loss placement in future lessons, but that's your buy trade there. Just retested support, you can make nice profits pushing up here. But when you're taking a buy trade here, what are you looking for next? You're looking for the next resistance. And we know, because of our top-down analysis in lesson 1, that here is going to be the next major resistance. So from here, we've got a clear range almost to make 100 pips. Quite easily, price is pushed up. Then we can hold some of the position. Again, future lessons, we'll talk about taking some profit and holding some positions in the future. But we broke above, retested as support, came below, but actually broke back up straight away, retested as support, and then we pushed up. But where are we pushing up to here? If you're taking a buy trade here, you retested as support, you need to know where price may go or where it's going to go, so you can either take profit, or you may even want to take a reverse trade and you may want to sell. So how do we figure out where this next level is? I'll just pause in so you can have a little think. Now, think about lesson number 1. How did we work out? The levels? We worked out our monthly key levels. We split it again in the middle to make our weekly, and then we split again for the daily. Now we can do the maths, and we can see here they're equally split up. So each level's equally split. So what do we need to do? Add on the next level. So we can do the math quite easy, work out what the difference is from this support to this resistance, the difference in pips. You can use this measuring tool as well. It will show you exactly. So 125 pips. So we add 125 pips on top, which is there. So now if we get the resistance, there is 125 pips. I'm going to make it exact because I like to be exact. There. Now let me remove these. See how price has broken this resistance and it's come up and hit that level exactly. Now, if you didn't know top-down analysis, you wouldn't understand why price is rejecting this, or why price has come down. Or if you bought and you didn't know why price is coming back down to your entry price, because you didn't have the top-down analysis done and you didn't know where your level of resistance was. Again, if we wanted to add another one, we could add another one if price broke above. But price, another tip here, a gem which we'll be coming back to in the future, is price loves to trade to ranges. So I love using the range tool. You're going to see this more in future lessons. But here, if price is trading within a range, price will then break above and move to the next trade within the next range, and then the next range, and then the next range, and so on and so on. But here, as I just showed you a minute ago, if you had taken a long trade here, where we've broken above a 1.3500, then you would have known to take some profit out when you got to the next level of resistance. Then you would have seen the candlestick formation here, which we're going to talk about in future lessons as well, which is actually upcoming. One of the next couple of lessons will be about candlesticks. And you can see here how price has rejected. So you would have known to take your profit rather than losing money in the market or losing your profit and coming back to square one again. And what you could have even done is realize that you're at resistance. And what do we want to do at resistance? We want to sell. So you could have looked for a short trade and made money on the way back down. So there is just something from lesson 1. Again, price has just showed us exactly how it works, how we've broken above the monthly resistance level here, and then we pushed up and we've hit the next level of resistance. So now price is within this sort of range, and we'll be watching, again, I keep saying it, we'll be talking about this on future lessons, but we'll be watching how the candlestick closes today. If the candle can close below support, then that might mean more downside next week. The weekly candle, very, very important as well. You can see the weekly candle, the body hasn't closed above resistance. So it's a very, very interesting week for GBP USD, and something we'll be watching out for in the coming weeks to start trading, or to carry on trading, but potential trades coming up. Now, that was just to cover what lesson 1 and lesson 2 combined have shown us, and we can see here in real time. This is the market's currently open. We can see in real time how everything that was showing you works. Now let's move on to lesson number 3. So a nice little reminder, that a nice little sort of refresher of the support and resistance. So now let's move on to lesson number 3, which is all about market structure. So let me just type that out quickly. Oh. Market structure. Made that a bit bigger. Market structure. So what we've got here, guys, is it's all about the structure of the market. So what we want to do is understand how the market moves, and this is really important. Now we understand from the lesson number 2 that the market moves in trends. We understand the market doesn't move like this and just keep going down, or it doesn't move straight down and it doesn't move straight back up again. Otherwise it would be impossible to trade. Price will be all over the place. But price trends. What price does is it always trends. It pushes down, then it pushes back up again. Pushes down, then it pushes back up again. Then it pushes down and pushes back up again, and so on. Now this is a trending market, and we explained last time how you need 2 points of a trend in order to make, or we need 2 points in order to make a trend line. Again, this is a little bit of a refresher, but it's really important to understand this with what we're going to be talking about next. So you've got point 1, you've got point 2, and then you're coming up for that all important point 3, where you would be looking at taking where you would be looking at taking a trade. But in this instance, potentially looking at a short trade, stop loss somewhere above, and then a push down. Now, market structure. Let's just talk about this and what we see here. So we need to understand that price is trending, but we need to learn more about this trend. We need to learn more about what this is. It's not simply just a trend. We need to now understand what each move really signifies and what each move really means, before we can start looking at the trend as well. And as I said, they're entwined. Market structure and trend, they're very important. There's a reason why in the second lesson we said you have to have 2 points to find a trend. As you said, 1.1, 0.2, because it's all about the third point on the trend. And I'm going to show you some examples of that shortly as well. But also that there's a reason for that 2 points, needing 2 points, which is because of market structure. We're going to get to that now. So firstly, we need to understand this is a move down. This is a down move. But in a downtrend, we need to understand what these lows and what these highs mean. So there's there's 4 names, but in a downtrend there's 2 names. There's a lower low, and there's lower high. These are the terminologies used in a downtrend. So what these are is, this is a lower low. The name will become obvious in a minute. So this is a lower low. So this is the first lower low you're seeing at the moment. So it may not make too much sense right now. But then price is moving in a downward direction. You see the trend is down. You can see we're moving down. So to help identify the trend, we need to understand the lower lows and the lower highs. Here we can see we've got a lower low, and then when we pull back, we're making a lower high. Now, why is it called a lower high? Because this lower high, if price is starting here, let's call this our starting point. Forget about this price action for the moment, guys. This is our starting point. Now, price pushes down, makes a lower low. Then price doesn't move. Price doesn't come back above our start. Sorry about this, guys. Price is not coming above our starting point. It's making a lower high. So price can come back either here, or it can come here and then move down, or it can come all the way up to here and come back down, and it's classed as a lower high. Why? Because this high here is lower than this high. Quite simple. So there's a lower low and there's a lower high. So then price pushes back down and makes a new lower low. So let's just copy this. It makes a new lower low. Now why is it a lower low? Because this low here is lower than this low. If we came down to this level here, we wouldn't have made a lower low. It would have been a double bottom, which is the market structure we'll be coming to later in the next lesson, or it could have been a potential equal lower low. But in this instance, we're starting off, we're going to teach you about lower lows and lower highs. So price has come down and it's made a lower low because this low is lower than this low. So again, it's a lower low. This is a low. This one is now lower than this low. It's quite simple. But then price is now pushed back up. Now price is pushing back up. It's making a what? It's making a lower high. So this lower high could be anywhere between here, this price, and this price. So this resistance here, which is our starting point, we can move this down to lower high. I'm going to explain why we're moving that down in a minute. So we can move that down to a lower high. So price can now trade anywhere from this point here where we currently are all the way back up to this level here and still be called a lower high. Anywhere just below this previous low, lower high. So price can move all the way back up here and still be classed as a lower high. Let me just copy this. Okay, I don't know why this one keeps coming up. Sorry guys. Okay, there's something going on with my computer. But lower high, let me just type it out again. Trying to save some time. Apologies for that. But anywhere below from here, coming back up, as long as it trades below here, this lower high, then it becomes the next lower high, as you can see. Now, if price breaks above, which we're going to get to in a minute, if price breaks above this lower high, it's no longer, it's in the name, it's no longer a lower high. It's going to be called something else, which we're going to get to in a minute. So price has to stay below the lower high in order to be called the last lower high, in order to be called a lower high. This is all going to make more sense in a minute, guys. Just bear with me. So from here, now we're pushing down, and the same thing goes again. So we had this lower low, price broke through this lower low over here and made a lower low. Price then pushed back up and made a lower high. Then it pushed back down. Where do we need to break in order to make a lower low? We need to break this level here to make a lower low. Because remember, if we don't break this level, we're not going lower. So it can't be called a lower low. But this is a lower low down here. So here we've got our new lower low. And before I go into the next part of this, what we can see now is this is a trending market. So you can see here, we started up here, we pushed down, we've had a lower low, we've had a lower high, but the high is not going higher than the previous high, it's pushing down lower. Then the price has pulled all the way back, in this case very, very close to the last lower high, but the high is still lower than the previous. So this shows us that this pair is trending. It shows us the trend. It shows us that it's trending, and it's going to become more obvious in a minute. If this price came up higher, it would mean that we are no longer trending, because you're not trending down lower. You're not making lower lows, lower highs, lower lows, lower highs, lower lows. If this breaks up higher and breaks above the previous lower high, then this is no longer a trend. And what's happening is you're now breaking market structure. You're now breaking the market structure and you're breaking the trend, and then you can class the trend as changing, and then we start to look for what I'm going to show you next. But for the moment, let's just bring it back quickly and just cover this one more time so we fully understand that in order to be in a downtrend, price must be making lower lows, lower highs, lower lows, and lower highs. Once this market structure is broken, Once this market structure is broken, then we can look at the trend being changed. But it's very important that you understand once the market structure is broken, because one thing I'm going to show you now is about market structure and market structure not breaking and trend lines breaking. This is the part that many people get fooled and lose money in the market to. So here you can see that we're in a downtrend. Price has been moving down nicely. Let's say for argument's sake, can we draw a trend line on here? We've got 1 point here, we've got 1 point here. I'm going to move some of these support and resistance levels out of the way. We can see we've got a lower high. See here we've got a lower high. Here we've got a lower low. Price is trending down very, very nicely. And then price. So what happens then if we do come up back to here? Now there's instances where, as I said, we need to keep moving. Remember a minute ago where I had our resistance? I said we keep moving it down to the next lower high, because it's these lower highs and these lower lows are very, 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 very important to understand the market. So let's look at now, we've understand when price is coming down, it has to make lower lows, lower highs, lower lows, lower highs, and to keep trending and to keep making lower lows. Now what happens if we come back up and come up to the same level as the last lower high? When we come back up to the last lower high, as long as price does not break and close above the previous lower high, so the candlestick break above, you can have wicks to the upside, but a candlestick closing above the prior high invalidates this downtrend. It invalidates the downtrend. Remember, lower lows, lower highs, lower lows, lower highs, lower lows for a downtrend. But as soon as the last lower high is broken, then the trend has changed. And this downtrend that we currently see is no longer valid. And it means that the trend is changing and we're now going into an uptrend. But before we go into an uptrend, let's look at what happens. What if price does come back up and hit the same level as the previous lower high? Because this happens often in trading. What happens if it comes up and hits this level? As long as the body closes below resistance, you can have wicks to the upside, because sometimes that's what is stop loss hunting, which is something again is for future lessons. But price can come up and we may see some wicks to the upside, the wick of the candle to the upside, but the body of the candlestick closes. It means that price was unable to close above the high, and we could still then see a great opportunity to take a trade all the way back down, a swing trade with minimum risk and huge reward if we can come back down. What would we be looking for here if we took a sell trade here? We'd be looking at price having a stop loss above the lower high, because we know if price breaks above the last lower high, that this downtrend is no longer valid and price is going to start moving up. So here is a unique opportunity in the market. If you can find these equal lower highs or equal lower lows, to take an entry, and because then you've got minimum risk, because you know that only a small stop loss is needed, because if you break above the last lower high, the downtrend is invalidated. So we know if we put our stop loss here and price breaks above, we don't want to be in the market, because we know that price is going to start moving up higher. But if we got an equal, let me just type this out as well. If we got an equal lower high here, that does not need a border. We've got an equal lower high here. And equal, we're saying, because you see it's the same level, then it gives us a great opportunity where we want to short this market, and we're expecting price to come down and make a what? Because it's still in a downtrend. The downtrend hasn't been invalidated because it hasn't broken above the last lower high. We're expecting price to come down where? To make a new lower low, to continue this downtrend that you can see is happening. So first we'd be targeting the last lower low, where we know we might find some support from support and resistance, so we might want to take some profit off the table. But for a swing trade, then we'd be expecting price to push down lower and make a new lower low. And then when price gets down here, we'd want to be looking at taking some profit, because we know that price is continuing this downtrend, lower low, lower high, lower low, lower high, lower low, but it's come down and made a lower high, an equal lower high, and come down and made a lower low. So here you can have a really nice trade where you can make lots of profit with minimum risk and lots of reward. Now, let's just take off the support and resistance again, just to clear it up a little bit. There's something that is actually showing on my screen, which is going to be one of the most important things I'm going to teach you on this lesson, is that I have a trend line on my chart at the moment. Can you see where the trend line is? So this is just used for the direction that I'm showing you, that we're in a downtrend. But where's the trend line? This is the trend line. Why was that? Because we had point 1, point 2. So we put a trend line on the 2 points, extended across, and then we see that we have point 3. Now, from what I've told you in lesson number 2, point 3 on the trend line is where we want to be looking at taking a short trade, right? Yes, this is very, very right. But this is the all-important place where so many people get caught out in the market and lose money because they don't understand what is going on here. And this is going to be the takeaway thing from this lesson, guys. And you're going to back test it, just see it happen. And there's also a breakout strategy that I have, which I've shown previous members, and some people have just purely used the breakout strategy. That's going to come in a future video as well. But the trend line breakout strategy, we're going to touch on it slightly here, but purely that and that alone can make you a lot of money in the market. But here is why there's so much confusion. There's a little indication of why, because you've just seen here how price has broken out of this trend line. So I just said a minute ago, point 3 is always where we want to be looking at buying or selling the market. So we're looking for price to come up and touch the third touch of the trend line, and then we can look at taking a sell trade. But do you remember in lesson number 2 when I said that trend lines, I also call them trap lines? They're trap lines in the market where the market knows. This is again there's so much to cover in this course, but the market knows. When I talk about the market knows, I'm talking about market makers, but let's not go into that. That's very technical at the moment. But everybody knows that a lot of people use trend lines. Trend lines are renowned in trading, but trying to trade them can be very complex and people lose out. And you might have got into the trade a bit too early or a bit too late, or you might have got stopped out if you've been trading before, and only to see that the price moves in the right direction eventually. It's because people don't know how to trade them, and they don't use market structure properly. Now here, yes, you are valid to look for a short trade here, to look at taking a short trade here on the third touch of the trend line, just like we said in lesson number 2. But it doesn't always work out that easy. If it was that easy in trading, everybody would be doing it and selling on the third or buying on the third touch of every single trend line that you ever see. It's not that easy. Then you have to couple in market structure. As I said, it's entwined. Market structure and trend lines go hand in hand with each other. So here we can see that if you understand market structure, you understand there's most retail traders, once they see that this price is broken, above, they take that as a break of a trend line, and therefore they think, right, price has broken resistance here, because remember, a trend line is also resistance and it's also support. It's another form of support and resistance. That's why it was lesson 2 after the normal support and resistance, which you can see with the horizontal lines. So most people would take this as, okay, I've seen that price has broken this trend line. That means that this is going to push up higher. But that is wrong. That is very, very wrong. Price has to break, and write this down, guys. Price has to break market structure to change a trend. That's one thing to write down. The second is breaking a trend line does not mean you've broken a trend. Those two things there, if you're new to trading or even if you've been trading for a few years, are so important. I can't emphasize it enough. And here I'll give you a brief explanation why. We know from market structure that price has to break where in order to invalidate the trend. Price has to break this level here, the last lower high. Price has to break this level in order to invalidate the trend. So if price breaks above the trend line, that's fine, but it doesn't mean it's broken the trend, because it has to break above this equal lower high potential that it might make. It has to break above with a candlestick close above this level in order to invalidate this trend. So the candlestick has to close, not just the wick, the candlestick has to close in order to invalidate this trend. But while price is trading below or equal to this last lower high, price is still bearish and you can still look for a trade back down. So here prices come up, and it doesn't happen as often in a trending market, but often it does happen a lot, that price will come up and hit an equal lower high. So it'll come here, you can see this horizontal line, price will come up and make an equal lower high, just as you can see here, and then price will reverse to the downside. So then when people are in this area, highlight this whole area, looking at taking buy trades in the opposite direction, because people think, okay, we've broken a trend line, now it's time to break a trend, to take a buy trade. They're not realizing that if they look left, we've got this equal lower high over here, and without this being broken, there is no downtrend invalidated. So what's happened here now is that price has pushed back down and it's broken below the trend line, and this trend line then gets adjusted. So it's very, very important to understand that breaking a trend line does not mean breaking a trend, and we're going to show you some real life examples of that shortly. But now we're going to look into, remember I said there's 4 names. I've given you 2 so far, but there's actually 6. But let me just start off. So 4 names, we've got lower low and lower high, as you can see here. But that's in a downtrend. Now what does happen when we break above that last lower high? Well, that, as I explained a minute ago, is when the downtrend is no longer a downtrend, and we've now switched to an uptrend. So let's look at that scenario now. So price has come up here. We have broken, let's say price has not come up and made an equal lower high. What price has done is price has come up, it's not made a lower high, it's not made an equal lower high, price has broken up. So what do we call this? This is called a higher high. So this is the 3rd name so far. So you've got lower lows, lower highs. Now you've got a higher high. It's quite simply in the name. It's quite simple, very, very textbook. And it's so simple. Just keep the thing simple and you'll do very, very well in trading. Higher high, what does that mean? It literally means we've made a higher high. So this was a lower high, but we broke through and we've now made a higher high. So it means that all of the previous is invalidated. So we don't care about that anymore because we've now made a higher high. But if we made a higher high, then what are we likely to do? Or what are we going to do? We're going to come back, because what does the market always do? Like I said at the start, the market doesn't just go down and then back up again. It always trends. So the market is moving down, so low, 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 high, low, 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 high, low, low. All of a sudden, boom, some news comes out or market changes, price breaks above the trend line and breaks above the last lower high, and the equal lower high breaks above. Now what do we expect to do? Price is going to come back and trend. Now from lesson number 2, what did we teach you in lesson number 2 with trend lines? Trend lines are support and resistance. So if you break a level of resistance, what do we expect price to do? Come back and test as support, at least. So here we could say we've made a higher high. We've now invalidated this trend. All of this is now doesn't matter anymore because price has just broken out, and it looks to be telling us that we're now changing trend because we've broken the last lower high. Now we're coming back down. We're retesting the level of the trend line, which is acting as a level of support, or we may come down to sort of this region here, where you can see we've had this last lower high, but we need to understand that the trend line could be below. So we've slipped below here, and we're coming and testing this level of this level of support, which is the trend line support. Now, what do we call that? Quite simple, a higher low. So this was a lower low. Now we've gone on and we've made a higher high, not a lower high, higher high. We've broken the lower high. We've now broken the trend. We come down, we're making a higher low. So then price moves back up. What do we expect price to do? Price is either going to come up here, but if it's going to trend, it's going to push on and make a higher high. As you can see here. And then then you can see how the trend has changed. We're now in an uptrend because we're not making lower lows, lower highs. Now we're pushing up. We made a higher high and a higher low. Higher high, then what do we expect the price to do? To come down and make a higher low. Now what could you do to expect to buy? If you understand that this is now in an uptrend, you could be looking at taking a buy trade. So what do? Trend line. Put a trend line on 2 points. You can see here we've got 0.1. Price has pushed up, made a higher high, and now price is coming back down to make let's say 0.3. We've got an area of resistance here. We've got resistance here where price has pushed up. Price has made a significant high in the market, and then it's pushed down and made a support. Found this level of support here. Then price has pushed up, broken through this resistance, here, like in lesson 1. It's obviously found some resistance up here somewhere, and so now it's found resistance. It's coming back to retest support. But this is another beautiful thing, and this is where it is very, very important in trading. What you want to do is get as many reasons to buy or sell the market as possible. So if you can combine support and resistance from lesson 1, trend line from lesson 2, market structure from lesson 3, if you can combine those 3 for a trade, you're almost on the road to successful trading already. There's a lot of other stuff that you don't even need to know. There's other stuff that is icing on the cake, but these as basics can make you so much money in trading by keeping it simple. And it'd be amazed at how traders trade for so many years, and they have so many other things that I'm going to show you, like Fibonacci, which can help. There's other things in the market, candlesticks, which is the next major thing. But by keeping things simple, people have so much emphasis on complicating things and forget to keep it this simple. And this sounds very simple, but we'll see some real life examples in a minute where you see this time and time and time again. And then when you lose a trade, sometimes you look back and you think, well, why did I not see that? I knew that. But it's because you're trying to overcomplicate the market. Here, what I'm getting at is if you can combine more than 2 things in the market for a reason to buy or sell, then that is the golden opportunity to take a trade. So here we've got one coming. We've got 0.1 of the trend line, 0.2. So we know we want to buy or sell on 0.3 of the trend line, which is going to be here. But then we can combine that with what else? It's a level of support, because we've broken through resistance here, and we're coming back to this as a level of support. And then if that's a monthly support or a daily support, it gives you extra strength. Then you have candlestick patterns and so on. And I'll just throw in there quickly, as I mentioned about Fibonacci. We pull back, we've come back, hit the 50% Fibonacci. Gives you more confluences and more confidence to take a trade. But here we can see now how things have changed. We've now broken out of this downtrend. We've broken this. Once we've broken up, and breaking out of the trend line wasn't enough. We had to break the lower high. Once we broke that lower high, we made a higher high. You can see the connection. We've made a higher high from the lower high. Then we come down and made a higher low. Price is pushed up, and now it's confirmed this is a trend. Why is it confirmed? Because it's made a higher high. And as I said at the start, there's a reason why we said 2 points on the trend. We need that second higher high to confirm the trend. Because while price is here, price has come down and made a support here and pushed up. Until price breaks above this higher high, it hasn't confirmed this as a trend. So once price breaks above this higher high, we can then put this trend line across. It's broken its higher high, so now we can see it's made two higher highs, 2 points. A higher high here, higher low. Higher high here. Now that means we've confirmed that we're in a trend. If the price comes back down, we know that we can take a buy trade here, and we want to look at price pushing up higher. Stop losses, you'd be looking at a stop loss potentially below the last higher low. But why is that? Why would we want to stop loss? Stop loss is, if you're brand new to trading, again, something we need to cover soon in the course. But here, let's say that we didn't. Let's say that price didn't. We didn't buy here. Didn't react off here and push up to the upside. What we need to understand in market structure is if price breaks here, just like I mentioned down here when price is breaking a lower high, when price gets to, let me just clear this up a little bit. When price gets to here and breaks a trend line, so many people take a short trade. They look to sell the market here because they think it's broken the trend line. People trade trend lines aimlessly, not knowing about market structure. So as soon as they break here, they get a big strong candle, breaks through the trend line, they take a sell position, and then the market moves back up against them. Now, do you want to know why that is? Quite simply, I said one of the biggest gems you'll take away from this video is the market price breaking a trend line does not mean it's broken a trend. It's so important. Price can come down. There's quite a lot of room for price to play around here before it is classed as this trade being invalid. This new uptrend that we're currently in, price has quite a lot of room around here to trade at before it can be classed as being the new uptrend being invalid. Can you guess where that is? Here. Price can come all the way down to here and still move back up and still be classed as an uptrend. Why is that? I'm going to move this old trend out of the way now. Why is that? Can you guess? Because what has this point here done? It's made an equal higher low. Just like we showed you on the downside, as long as if price comes up and makes an equal lower high, then it's still in a downtrend. It's only once the lower high was broken with a higher high that it invalidated the downtrend, and now that's why we're now moving up. It's the same vice versa. So if price breaks the trend line, here, 95% of retail traders take a sell trade. They go in a little bit of profit, then price moves against them because they don't understand this very, very important subject of the higher low. And this actually came into play in trading this week. I'm going to show you a real life example shortly. But this higher low is so important because unless price breaks below here, this higher low, unless price breaks below here, and makes a new lower low, lower than this previous low, the price is still in an uptrend. Here, if it done this, then it would invalidate this uptrend and we would now change to a downtrend. But in this instance, we haven't. We've come back, we've got all of this space here, and this is the trap zone a lot of the time, especially on lower time frame, when you get to 4 hour, 1 hour time frames. This is the trap zone. This is where the confusion happens in the market. People buying and selling, not understanding what's going on. Half the market thinking that it means sell. Half the market thinks it means buy. You always get some consolidation around this area, and then price moves in the obvious direction because price hasn't broken the last higher low. It's made an equal higher low, as you can see here. And then price has done what? It's pushed up. And this is the best possible place you could look at buying or selling, because here you've got an equal low and we know that if price goes any lower than here with a body, so a full body of the candle has to break below this level of the higher low to invalidate this uptrend. So we know that this is the place where we've got the most minimal risk and the biggest reward, because here then if price can continue this trend up, we're going to break this higher high and push on to make another higher high, and then you can see here the risk is minimal and the reward is fantastic. So this is what we need to understand first as market structure. This is so important. I've gone into quite a bit of detail here because it is really important to understand this. You can go back, rewind it, look at it a few times, and just understand exactly how it works. So hopefully that you can start looking back at some trend lines and seeing how that came into play. Now, as I said, I'm going to show you some real life examples now. So I'm going to go over to a trade. This is a pair we're actually looking at this week, and we're looking at trading this week. I'm going to show you a real life example on a different pair. So this pair is called USD CAD. So this is the US dollar against the Canadian dollar. Now we're looking at trading this week. I sent out my analysis. I was explaining this exact scenario that could happen in the market. Now this is what I mean. I've been trading a long time, over 10 years, but these things happen day in, day out, and I can see where the normal retail trader is getting caught out. This is on the 1 hour time frame, but it's going to be a good example. So price was trading. Might even use a replay tool here just so I can give you guys the understanding of what most retail traders think. So here I explained to our community, I sent out our analysis that price was going to come down, and we may be looking at taking a buy trade on USD CAD. So we want we want this market to move up. Now let's just play what happens over the next few hours. I'll just quicken this up. So here is the all important area. So I actually sent the analysis out when we were at this area. Here is where I mean 95%, and I know that if some of you guys have been trading 6 months or a year, you would have been caught out by this sort of scenario, where you see a big bearish 1 hour candle or 4 hour candle, and you think the market's broken the trend line, it's going down, it's broken the trend line, it means it's going down. You're aiming at price coming down to sort of this region here. If you can break through this region, you're looking for more. You're thinking there's loads of profits. You're just thinking about the money. You're getting the fear of missing out because this candle's so bearish and it's moved down so much. So you're thinking, oh no, if I don't get it now, I'm going to miss out. So many people, and I know because I've been there, I've done that. And so when you've been there and done it and you have the experience, I can now sit on the other side and see what everybody else is doing. So I know that everybody's looking at this and trying to take a trade here. But I sent the analysis out to our community and explained to them about market structure and reminded them the basics, because it's always important not to forget about the basics. That's the core, that's the foundation, and that's what we're building up here. So some of you guys have been trading before and you think that you know this stuff and you want to get to the more intricate stuff, but as you will see now, and what you probably realize is the basics are so important, and to have the foundation is very important to build from that and to have that strong foundation. So here I just reminded them about market structure. So let's just have a look at a real life example here. Here we've got a push up, and we've got on the 1 hour we've got potential high. Price has pushed back down here. We've made a higher low. Price has then done what? So in order to confirm that this could be an uptrend, especially on the 1 hour time frame, we've had one push up. That's not enough. Remember, 2 points is needed. We made a higher low. Okay, this could just be a minor pullback. I'm not interested unless I see this break above this level here. So here, then we pushed up, and we've done what? We've made a new, I don't know why, yeah, sorry guys, that's something wrong with my computer. We've made a new higher high. So price is coming back down. We've got 0.1. We've got 0.2. So the all important place to buy this is where? 0.3. But as I said, if it was that easy, everybody would be doing it. It's not that easy. This is where 95% of retail traders take a trade. They either take a long and they lose. Then when they lose, they see a big candle push down like this. So they jump in a short. And they will also lose. And why is that? Because they don't know about market structure. Now, if you do know about market structure, you know that there's a trap area and space for this market to move to before this 1 hour trend is invalidated. We've got higher high, higher low, higher high. If this comes down to, makes an equal higher low, it is still classed as an uptrend. So if price comes down to here or above, anywhere in this region, price is still, on this 1 hour time frame, is still classed as being in an uptrend. So what many people do is they jump into this trade here. I'm going to slow this down. I gave out the analysis this week and said, watch out for this level. This is the level that if we find support, we can have a really nice buy opportunity, because one, here we'll have the double support. Two, because if you place a buy trade here, we know we can have a tight stop loss, because if we come any lower than this level, it becomes invalidated. But if we stay above this level, there's a good chance of seeing a really nice move back up to the upside to do what? To attack the last higher high. And then if this trend is going to continue, to push on and make a new higher high. But we're aiming to come here first and then potentially push up higher. Now let's look at what happened. Price came down, hit the higher low, and instantly reversed to the upside. So where most people are getting in, so there's a bearish candle, fear of missing out comes into the market. People think that this is going to really dump and start pushing down to the downside. They sell the market here, then the market reverses, because everybody thinks that because the market has broken this trend line, they think that this market's going to push down. But what I said earlier, you need to write this on your in front of your screen. Breaking a trend line does not mean that you've broken a trend. It's so important, because here you have to break market structure. And this is what this lesson is all about. You have to break market structure in order to break a trend, not the trend line. I keep saying it because it's so important. Then we just look, let's see what happened, what else happened here. Then we can see price came up and we couldn't break this higher high. In overall, this is in a downtrend. USD CAD, you can see here, we're pushing down lower low, lower high, lower low, lower high, and so on. But on the 1 hour time frame, this was in particular. So this is why you want to be taking some profit as you reach this previous lower high, because if price can't break this, then the price could invalidate and start pushing down again. But with this instance here, we can just see how important that was. 0.1, 0.2, 0.3. But 0.3 doesn't matter. You have to understand that price could break through and come towards this lower, higher low. And this is where with something in the future, we're going to make a video specifically on it. Is purely the trend line strategy, which I've showed people and they absolutely love. And some people stop trading other things and just purely trade the trend line strategy, because it's understanding about the problems around the trend lines and understanding about market structure. So that gives us a nice example there on this pair on the lower time frames of how market structure works. So now let's look at putting these into real life experiences. So we've got one real life experience here, market structure. So now what I want to do is go back and show you a little bit more on trend lines and cover trend lines a little bit more in detail, as at the end of lesson 2, I explained that lesson 3 would need to go into trend lines a little bit deeper. We kind of touched on the main basics of trend lines. We showed the outer trend line, the long-term trend line, the outer trend line, and the inner, the 3 types of trend lines. But now we want to just show you that on a bigger scale. We've had some messages, we've had some comments on the YouTube channel. As always, guys, if you like this video, please like, subscribe, and leave a comment. and give us some, let us know your feedback. But we looked at some of the comments. I'm going to go over a few things that, a few of the questions that have been asked also. So let's just go back to the higher time frame on this pair, USD CAD. So I'm going to leave all of this down there. I'm actually going to, let's get out of this replay mode. I'm actually going to just delete this for the moment. Yeah, I'm just going to take it off. And let's just start with a clean canvas once again. Clean canvas, I mean clean chart. Absolutely nothing on it. I'm going to show you how simple trading can be. So, as we know from the last lesson, we know the basics about trend lines. We kind of showed it on the weekly, daily time frame. I want to drop down to the lower time frames, 4 hour, 1 hour. And that's where more often the market structure really comes into play, because we don't see it too much on the daily. And one of the reasons that is because trend lines and support and resistance on higher time frames are stronger. So what I mean by that is, if we have a trend line on the daily, these are stronger, so we don't break through them as much. To remember, the higher the time frame, write this down again, top of your notepad. There's certain things I say here, I'll say write down because they're so important. On a higher time frame, everything is stronger. Higher monthly support and resistance, higher time frame trend lines. On the monthly, they're the strongest. Then they get weaker as they move down. But monthly, weekly, daily is all strong. So daily trend line is quite strong. So we normally see this respected a lot more than a 1 hour trend line, because a 1 hour trend line is a lot weaker than a daily. So what we tend to see is these break through quite a bit, but then potentially still move back down because we haven't broken the trend. We've only just broken the trend line, like I've just explained on the annotations over here. So I'm going to show you, we're going to start off on a daily time frame and look how easy it can be. So first off, we can see in front of us quite simply daily here, weekly time frame. We can see for a long time we've got a significant high over here. Price has been moving down. It's in a downtrend. We don't really need to draw lines on our chart to really see this. It's quite an obvious one. But let's look at how well and how easy trading can be if you just understand to go with the trend. Again, top of the notepad, always try to trade with the trend, and trying to combine weekly, daily, 4 hour trends all together, and you'll make your life a lot easier. So here, let's just go. We're going to start with our long-term trend line. So we're at the tip top here. So we want to go to what? We want to go and see where our second point is, our second point of the trend line. Then we want to draw on a trend line, and then that ascends into the future, and then we get our third point. So here we've got our significant high, and we can draw a trend. Let's just say here, say this price hadn't happened, and we had this high here. We have 0.1, 0.2. Price comes back. This is a good example. I'm going to just go through one by one and try and show you as many as possible. So let's imagine that this is price action. It's even happened here. So here we've got price action. We've got 0.1, 0.2, and then we're looking at 0.3. What can you see here, guys? So like I just explained, we've got the start. Then we come down, we've made a higher low. Sorry, a lower low. Then I'm just going to mark this out quickly here. I'm just going to mark it out quickly. A lower low. Then we come up, we made a lower high with this candle here. Then we come down and we made a lower low. We've actually made it here, sorry guys. Lower low. So we come down, lower low, we pushed up, lower high, lower low, and we made a lower high. So this high, this is the last lower high. Then price is pushed down, and what has it made here? It's made a lower low, because this low is lower than this low. So then here we've got a trend line, and many people think, oh, we've had a strong break above this trend line. That means that we can buy this market, and the market is going to move up. But remember, this is a valid downtrend because we haven't broken above the last lower high. So while we trade below this level here, price can still move up anywhere to here. It could short term move up in a buy trade, but here, as long as we don't break this level here, we make an equal lower high or below this level, then price is still going to move down lower. So let's just have a look and see what happens over the next few candles. So you can see what price is doing here. It's come down. It's made a lower high from here. So this is that level. Let's just make them a bit more accurate now. So you can see here we've got lower low, lower high, lower low, lower high, lower low. Price came up, stayed under the last lower high. So just for ease, I'm going to put on lower high. Remember, let's go back to here. We've got lower low, lower high, lower low, lower high, lower low. But as long as price doesn't break above this lower high, we're still in a downtrend. So here, price has broken its trend, but hasn't broken this lower high. We have to invalidate this lower high and make a higher high in order to invalidate the downtrend. So lots of people start buying here, not understanding the overall trend. Then when we break, when a trend line is broken, what we want to do is we want to move it out. We want to move it out to this level. So new significant high has been made. We move it out. Now we've got 0.1. We've got a new point. We've always had 0.1. We've got a new 0.2, and now we're coming into 0.3. But remember, this is where we want to be looking for sales around 0.3. But remember, price can come anywhere as far as here, because this is the new lower high. This is the new lower high here. So price can come up at this area when we want to be looking at taking short trades. But remember, price still has the room to maneuver as far as up to this level and still be classed as a downtrend. Just because it's broken the trend line here doesn't mean that it's broken a trend. Even though it's broken a trend line here, doesn't mean that it's broken a trend. And it keeps moving down, so you can keep taking short trades. Now let me go back because it's not exactly what I wanted to show. I'm going to get rid of all that, but that was a quick, nice example there. Let's go back to, let's get out of this replay mode. Let's just have a look here. So just looking back at previous, so you can see here, let me just quickly, sorry guys, I am going to go back, I just want to complete that for you. Just as you could see here, just where we were. Yeah, just where we were here. You can see just before I cleared it, let's make it a bit neater. This is the lower high, the LH. This is the new LH, and you can see here, we just keep pressing the price. As I mentioned, price has all this room to move up to this last lower high here before it drops off. But it's, I mean, it has to break this level here in order to invalidate this trend. So therefore, while it's still trading under this level here, this lower high, it's still in, oh sorry, it's still in a downtrend. Sorry, I took this all off, but I think it's going to be worth just playing this out for you to really help understand. So we've got one lower high here, we've got one lower high here. Apologies for drawing this all again, but I really want you to understand and just to help your trading. And then, so here we've broken through the trend line, but we know unless we break this lower high that we're still in a downtrend. Lots of people start buying in the wrong place. Price breaks above, pushes back down, makes a significant high. We can adjust the trend line. So now, remember a minute ago I just said this was our new 0.2. This was our new 0.2. Well, now that this is broken higher, we need to now adjust. So this is now our new 0.2. That's our new second point, 0.1, 0.2. So then we can be looking at when the price comes back for 0.3. So let's press play. Let's see what happens. 0.3. Price comes up. You can look to sell here. Look at candlestick structure, which is going to be one of the next lessons. 0.3. Then you can look to sell. 0.1, 0.2. This is the daily time frame. We know that the daily resistance is going to hold stronger because it's a daily time frame. And then so you can look at taking a sell trade here. Short. Where would your stop loss be? Ideally above the last lower high. This is the last lower high. And now that price came back down, made a lower low or equal lower low, came back up, made a lower high here, as you can see. So now this is the new lower high. So as long as price stays below this lower high, then it means that we're still in a downtrend. So let's just really zoom in here. As long as price stays below this lower high here, when price comes up for that third touch, As long as it stays below this level, it means that we're still in a downtrend. Whereas if we broke above this lower high, it would mean that we'd now be looking at potentially going into an uptrend. But price has come. Let me just move this out of the way. Price has come up to this third touch, and we know that price can come anywhere. Anywhere around here is an ideal place to be looking at a short trade, especially the closer it gets to this last lower high, the better, because it means the more minimum risk, because your stop loss wants to be above the previous lower high. So the closer that we get there, the better really, because then we have the minimal loss or minimum risk with huge reward. Now let's see what plays out. So on top of that, we can see here we've had these spikes to the upside, up to the upside here, and we've pushed down. So now we want to adjust this trend line to this wick. Now this becomes our point 2. So you keep adjusting. It's something that people don't do. They leave their trend lines on, but trend lines are support and resistance. So move that across. Now you can see that we've changed our point 2 a few times here. Point 1 stays the same because this is the main point of call. Nothing changes here. This is the significant high. But point 2 has changed from here. Remember, point 2 has changed. We tried to break through here, but we couldn't break the last lower high, and price rolled over to the downside. Now this was our point 2. Then this became our point 2. As you can see, this was our point 2. Price came up, couldn't break the last lower high, which was here, and then price pushed to the downside. This now became our point 2. Now the price has tried to break through here and push down. Now we adjust again. This becomes our point 2, and this is our most recent lower high. Let's get rid of that. Let's get rid of that. And now we can see what is price doing. So let's say we sold here. There's too much going on here now. There we go. Let's say we sold here on that third touch. Let me just get rid of that so we can see it a little bit more. Say we sold here. Now price is coming back. So this is point 2. Price is coming back to point 3. Let's watch what happens here. And now we're off. Now we're having the big juicy trade. Let's just see, that price is here, it's pushed down, and we've now pushed down. We've got the trade, it hasn't even come back to the trend line this time, and boom, now we're down. Now we're going big time. Now we're looking at, on a daily time frame, we're looking at 800 pips, huge move. And we know this goes down because we saw it at the start. But let's just see how this trend line reacts. See how it reacted to that there again, guys? Even here, taking a short trade here, that's 160 pips just by using the trend line. Because be very strict with your trend line. As I said just a minute ago, we didn't actually touch the trend line here. So we didn't have point 3. This is point 3. Now let's see what happens next. Respects the trend line again, respects the trend line again. And something interesting here. This is the last lower high. We've pushed down. What have we made here? We've made a lower low. Now price has pushed back up here and made a lower high. And then it's pushed down. Then price came back up to retest it, but didn't come past the last lower high here. The new lower high. And then price continued to push down lower. So that's a good example of market structure in real life scenario. I'm going to get rid of this and I'm going to clear this all off once again. But now when we want to just look back at lesson 2 and we want to look at trend lines, we got the long term, the outer and the inner. So here we can quite clearly see we want to place on our long term. So as I said, so easy sometimes when you look at what's happening. If you had this on your daily chart, you had point 1, you had point 2, and this is a perfect example of market structure. Can you see where the perfect entry would have been here? And you could have made lots of money, lots of pips. Can you see the perfect entry? Just by from what I'm showing you today. And just seeing this, it just makes you realize how easy trading can be, and people overcomplicate it so much. So this is what we call a swing trade. You can see here you've got point 1. Just from everything that we've taught you in lesson 2 and lesson 3, or lesson 1, 2, 3, you could be making great trades here. You've got point 1 here, you've got point 2 here. I'll just highlight them just for the ease. So what are we looking to do? We're looking to sell on point 3 Understand? We said that in lesson number 2. The important place is the third touch of the trend line. But what we're now teaching you about that third, we're delving into that third touch of the trend line, where most people get caught out. I said if it was as easy as buying on the third touch of every trend line, everyone would be a millionaire, everybody would be rich. But now we're showing you the detail of that third touch and how to make the right trade. Because when you get to this third touch, how many people would break here? How many people would buy here when this strong daily candle closes above? 95% of retail traders will buy here, or they'll buy on the retest of when it comes back to tested support. But what they don't understand is if you look back, the trend is your friend. As I just said, to write on your notepads, always go with the trend. Always look at the higher time frame. The higher time frame is the strongest. Daily, monthly, weekly, daily. Here you got the daily time frame showing you that it's in a clear downtrend. Lesson 2, I said the trend lines are direction lines. They can clearly show you, use an arrow for your trend line if you need to show you that price is going down. So don't try and fight against it, because the momentum's to the downside. So imagine like a piano is falling down a staircase and you're trying to push up against it. It's a lot easier to go with it rather than trying to go against it. So if you can find reasons to go with it, find the reasons to go with it. And here are the reasons. Here we had a break above, but we know market structure that 95% of people don't use, or they know but they don't understand it. And in the moment of when taking a trade and the emotions come in, then you make all the wrong decisions. I mean, quite clearly we know in market structure, this is the last lower high. Price can come where and still be classed as a downtrend. Price can come as far as this lower high and still be classed as a downtrend. It can come as far as retesting this, even making an equal lower high, and still be classed as a downtrend. Remember earlier I said as long as the body of the candle doesn't close above the last lower high over here, then we're still in a downtrend. We're still going down. We have to break above this lower high. We have to break above here and close with a strong body in order to invalidate this trend and then start buying. But while you're trading underneath this level, you want to be looking for short trades. Let's quickly go back to what we drew earlier. So unless price breaks this lower high, breaks above, unless price breaks above that level and makes a higher high, then we're still going down. We're still going to go down. Here, we showed you that where it breaks above, then you made a higher high, now you're trending higher. In this instance, no, we've done exactly what we've just showed you. We've come up, we've made an equal higher low, and this is the best possible place you could place a trade here, because we know with a stop loss where we want to get out of the market if we made the wrong decision, wants to be above the last lower high, because once this is broken, or once we see that a body candle has closed above this high, we don't want to be in the market anymore. We want to get out. We can either close manually or have a tight stop loss. But should price come up here, tap this level, and push and reject and push to the downside, it means we've made an equal lower high. And then what are we expecting to do? Come down and make a new. This was a lower low. We're expecting price to come down and make a new lower low. And that means you're taking a swing trade which holds for a long, long time. You can take that trade, sit back and make huge amounts of profits. This is on the daily chart. So here you can see this is another 600-700 pips, which is huge profits in the market, massive. You guys know who've been trading, you know how big that is. So trading on the higher time frames can help you so much. You can see how simple it can be. So that's just a really, really good, let me just delete this all off again. That's a really good, I might just go like this if you guys want to screenshot your screens or anything like that. just to understand how here this is the trap area. This is the trap. And this is where the trend line strategy that I'll be showing you guys comes into play so much. The trend line strategy, from what I'm looking at here, has worked out absolutely perfect. Some of my older students will know exactly what I'm talking about and would have seen a trade there where you could have got into a swing trade and held for a long time. But it's there. I'll be teaching that in the future. But here, if you wanted to take a screenshot of that, and remember, breaking a trend line doesn't mean you've broken the trend. It only means that you've broken this resistance. But until price breaks this level, you're still in a downtrend. Prices come up, resistance, resistance, boom, came down. Really nice move down. So that's that on the daily. Let's have a look here. So we had the daily level that I just showed. So now if we were analysing this, our new point would be this point here. So you can see that on the daily. So that's our long-term trend line. Then we can still draw the outer trend line on the daily. All depends on where the 2 points come from. Here I'm just being very, very specific here. Then we've got the outer trend line. So we want to go from point 1 to the next point, which is point 2 here. So see here, if I just point 2, if I go to that and extend this lower, but let's just say again, I'm just going to go back to imagine if this price action hadn't happened yet, and this was our point. If this was our point 2 here, look how price came up, tested, didn't break the lower high over here, boom, went down. But here, let's now where price is now, we're trying to analyze now. We can see this was point 2, so you got point 1, point 2, and then bang, point 3. So just by learning, just understanding what we're saying in lesson number 1, 2, and 3, you can trade. You can trade successfully. You can take this away and only do this. Have patience in the market and only take these trades, and you can make money. Point 1, point 2 here, point 3, move down. Now we're coming back up, which is going to be very, very important for next week, where price is coming back down to coming back to test this. So this is what we want to understand as traders. Let me leave that there. We've got point 1 on the outer trend line, point 1, point 2, point 3, and we're coming back for an all-important touch here now as well. So what happens here is going to be important to what we want to decide to next week. So I'm going to just look at this now and see what the scenarios would be. So that's the outer trend line. We've got the long term, the outer, and what would have been the inner is from this line. It would have been coming through. Would have got choppy here, but we've broken out now. Would have been around here before. Would have been here. Point 1, point 2, point 3. Moved down, came back to point 3. Didn't break again. I hope you guys can understand. Remember, we've got the outer. We got the long term. We got the outer trend line, and then we got the inner. So this is point 2. And then again, even just using the trend line, we've got point 2, point 3. You took a short trade here, boom, you've gone down, you've made profit. Prices come back up to this level. What is this? This level is a lower high, lower low, lower high. We've got a lower high here, lower low, lower high, equal lower low, equal lower high, broke through, made a lower low, came back up, made a lower high, came back down, hasn't been able to make a new lower low yet, came back up, hasn't been able to break above the lower high. But we know that we are in what? We know we're in a downtrend. All 3 trend lines on the higher time frame. We got the long term, the outer trend line, and the inner trend line all pointing downwards. So don't be looking at trying to buy here. Then price is pushed down here, lower high. Price hasn't been able to break above. This is a perfect place to take a short entry because your stop loss only needs to be above the last lower high. You have a short entry here, and then bang, price goes back down. And it just happens again and again and again. Now here, we can see this is the lower high. So this is going to be very important for coming into coming into next week on USD CAD. So you can watch this one. Let's just get rid of these trend lines for the moment and just clear this up. So we know on a higher time frame, daily, we're coming towards a trend line that has been tested 1, 2, 3, 4. And what's quite important is the fourth trend touch. It can often just show how strong a trend line is. Once we tested it 1, 2, 3 times, it's shown the strength of a trend line. Coming for the fourth touch, more often than not, we can see a strong rejection as well. So it'll be very interesting to see what's going to happen here next week. Here, we've now got two confluences for potentially looking at a sell. We've got the fourth touch of this trend line, and we've also got, we're coming up to, on a 4-hour time frame, we drop down to a lower time frame, we're coming up to the lower high. This is the all important level. Price has to break this level. See how it's done it once, twice, 3 times, and it couldn't break. So there was 3 opportunities to take a minimal risk with maximum reward trade here. From here, it actually did come down and make a new lower low. You can see how this low here broke this low. You can see the distance between them. Lower low, came back up, equal lower high. This time, haven't been able to make a lower low. We're making an equal lower low. We haven't been able to break lower, so price is now trying to move up. It's trying to break this trend line, but until we break this lower high here, this downtrend is still valid. So overall, it's still technically in a downtrend. So this will be a very nice, a very interesting place to look at USD CAD this pair next week and understanding the market structure. If price breaks above this level here and we break above, then what we can expect is price to push up, make that higher high, come back down, make that higher low, and then we start pushing on to make a higher high. Just like this example here. Higher high, higher low, higher high, higher low, and higher high. So hopefully that can help you understand how important market structure is to go along with the trend lines. And here is just quite a simple, straightforward, shows you the different trend lines. The overall on the daily, long term, then drop down to the 4-hour or daily as well. We've got the outer trend line, and then the inner trend line, which is on the lower time frame. As you can see, gets a little bit more messy, but you can see here on the 1-hour time frame was the inner. Remember earlier when I said how on the lower time frame everything is weaker? Trend lines on the lower time frame, support and resistance on the lower time frame is all weaker, so there's less chance of it holding. So that's why when you see areas like this here on the 1 hour, we've got making a lower low, lower high, price comes down, make a lower low, comes up here. You need to be careful trying to take a short trade on the third touch of a 1 hour trend line, because we know it's weak. So we know that there's what we need to watch out for is what? We need to watch out for the area between here and here, because this is the last lower high. So we know that anywhere in this area could be a good shorted opportunity to push this back down. So if you've understood that, you'll see your trading change over the coming weeks, and when you do your analyzing, you will see a big difference. If that has sunk in and you understand it. But I recommend, I know these videos are quite long, I like to go into intricate detail about things. If you're going to trade as a living and make a living as a trader, you need to understand everything in minute detail. So you may need to come back to these videos and rewatch them and take notes, and that gives you a real good breakdown just on a clear canvas there, picking out any chart, how trend line and market structure combined can really transform your trading and even be the only thing that you use as trading. You could use lesson 1, lesson 2, and lesson 3 and be a profitable trader. Now, last thing I'm going to look at is going to go back to our GBP USD chart. As we can see here, we've got this nice, I'm going to leave that there. If you guys want to quickly screenshot that as well, we'll come back to it in the future to help you understand. Let's have a look at one more example here. So I'm just going to leave that there for the moment. I'm going to go to this chart I was using to analyze during the week. I'm just going to clear this off. So let's just go back here and have a look at what. Sorry guys, that was a mistake there. Let's just go back here and see what we can see on GBP USD. This is the chart that we've been using the most. Remember, this is the daily time frame. So I'm just going to go here and see what we can see here. Just use an example on a chart, or a chart that we've been looking at the most in lesson 1 and in lesson 2. So let's go back to blank canvas. Blank canvas. We've got our support and resistance over here on the left, so we can have a blank canvas and really see what price is trying to do. Let's draw on a trend line from the significant low up. We've got 0.1, we had 0.1, we had 0.2, we had 0.3. So you can see here, it was that simple. 0.1, 0.2, 0.3. You could have had a buy trade here, and you could have had a nice stop loss, which I'm going to show you in a minute, and you could have had a huge move up to the upside and made 700 pips. So I'm going to break this one down quickly. How would you have taken that trade? So here, 0.1, 0.2. Again, I'm going to always just do this so we can always fully understand the way I've explained it previously and on the real examples. So 0.1, 0.2. 0.1, this is 0.2. Right, now price is making a higher high, a higher low. It's moving up here. Made a higher high here. It's made a higher low here. Then it's pushed back up. Made a new higher high here. So you got higher high, higher low, higher high. So this is the higher low. So what do we now know? If you had done what we showed you in these last 3 lessons, quite simply just put a trend line from the wick at the bottom, highlighted the wick on 0.2, let that trend line ascend into the future and wait for 0.3. Remember, like I said in lesson number 2, these trend lines are like a magnet. Price will come back for that third touch. It didn't touch here, but price pushed up and it did come back. But here's your higher low. So a lot of people will have been trying to take a trade off the trend line, which can happen in some cases. But when price came down to this trend line, what do we now know? Now that we understand market structure, we know that price can come anywhere between this higher low and this trend line. That there's opportunity for price to come down as far as this level and still be classed as a higher, being in an uptrend. Why? Because this is an equal higher low, as you can see here. It's an equal higher low here. So prices come down, and this is the best point where you could take this trade, because again, we know we only need a stop loss, a small stop loss, because if price breaks below this higher low over here, we don't want to be in the market, and it does mean that the market is going to change direction, because a break down here would mean a new lower low, breaking this level, and then what we would expect is price to pull back, and then we'd expect the next move down. But in this case here, price has come here, tapped the higher low, small stop loss, boom, price moves up. There's another really nice example. But understanding here, this is the point that we need to understand as traders, that there's that room for maneuver, not jumping in on the third touch without understanding, okay, what's the distance between the trend line and what's the distance between the last higher low or the last higher lower high in a downtrend. So again, I'm just going to delete this all off again. Just quickly go back on the daily chart. We'll do this last bit really quickly because I think this has gone into quite a bit of time, and then we can cover more on the next lesson. But here we've got 0.1, 0.2, 0.3 moved up. Here we go out here, we've got 0.2. We haven't touched it quite here, I'm very specific with my trend lines. We got the wick, we haven't had point 0.3, so we've had point 0.2. So point 0.3 is going to come in the future somewhere up here, but price will come back for that point 0.3 soon. But then what we want to look at here is we had this was the inner trend line. We can see here prices come up. We have prices moving up here. It was moving up. Price came down. It broke the trend line, continued to move up, could never break back above the trend line, which is another important thing to understand. Remember, trend lines are support and resistance. So once price broke a support, it kept moving up, resistance, 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 resistance. It couldn't break back above this trend line. So it's showing that this was acting as a resistance, and then we've seen price start to move down, and we've come back down towards the outer trend line, but we're still moving up high here on GBP USD. And then we drop down to the 4-hour time frame, and again we want to be looking at, let me just go back on here. If you're analyzing this would be your long-term trend line on the daily from the two lowest significant points. Then you want to drop down to the lower time frame and look for your outer trend line. So here we can go into the 4-hour, and we can see this is where we can draw a trend line. We've got point 1, point 2. So let's put a trend line on here. Now we can see we've got point 1, we've got point 2, and now we're coming back to that all important point 3. But here is what we need to also understand. So we've got here we've got lots of downside momentum possible for GBP USD, because we've got made a higher high, a higher low, a higher high. If this inner trend line here is going to continue, price could come as far as this region here and still push back up. So there may be some short-term downside, but we can, if price comes back down to this area or even this outer trend line, which we need to understand. Some people won't see that, and what we can probably see in the next couple of weeks is that price, sorry guys, this might get a bit choppy, that price might slowly come down to sort of this area before maybe perhaps making a move back up. But right now, on the outer trend line, price has just broken this trend line here, point 1, point 2, point 3. Another thing to note is that with trend lines, the steeper the trend line, the weaker it is. So steep is this, that's straight, this is steep, and then the more of an angle there is, the stronger the trend line usually is. The steeper the trend line, the weaker. So here we've got quite a steep trend line on the 4-hour, but we can see that price has broken this trend line and it's starting to push down. Now, if we could drop down to the 1-hour time frame, how would we be looking at potentially taking a trade on this pair? Well, what we need to understand is we do know that there's this potential to come to the downside here, so we can still come down. So there might be some short-term bearishness, weakness on this pair, but we've just seen that we've got a long-term trend line and an outer trend line here. When we drop down to the lower time frame, there's no place to place an inner trend line, or is there? Not all of the time are you going to have trend lines in the same direction, and that's a telltale sign when things might start to change direction. So sometimes you might have a long-term trend line and a outer trend line. Sometimes you can have an inner trend line that might be in the opposite direction, which we have here. So at the moment, we've got GBP USD, which is just broken. We've had a break here. Remember, breaking a trend line does not mean we've broken a trend. But we've broken a trend line here, and what have we done? We'll just drop down to the 1-hour time frame. We've done exactly what we would expect textbook from lesson number 2. What have we done when we've broken a trend line? We've broken a level of support. What do we expect to see when we break a level of support? To come back and retest it as resistance. So we broke this level of support here, and we've come back and tested it as resistance. Now, we've done our top-down analysis. We understand that we've got a long-term trend line and we've got an outer trend line. Let's find an inner trend line. Here at the moment, we've got point 1, point 2, point 1 here, point 2 here, and this was actually today the day of taking this trade or doing this video, here was a perfect place to take a trade. This was absolutely perfect. You've got confluences here to match. You've broken the trend line here, and now you come back and you're retesting it as resistance. But what you're also doing here, you're retesting this broken trend line as resistance, but just quickly take that away. You're also doing what? 1, 2, 3. But this is where market structure works on all time frames. So even here, as you've got a lower time frame, you still need to do the market structure. So you've got market structure on a higher time frame, higher high, higher low, higher high, higher low. I hope you can understand that. You've still got the swing higher lows, but then you got higher lows market structure that also worked on the lower time frame. And what do I mean by that? I'm going to stretch this in here. So you need to get used to placing higher lows and higher highs, lower lows and lower highs on all time frames. Here we've got a significant high. We come down, we've got a lower low here. This lower low here, this candle. Let me just drop down a little bit more so you can understand. Then we've got a lower high. Then we come down, made a lower low. Let's go back to the 1 hour, just make it a little bit more clearer. We've got a lower high here. If I made it a bit clearer. We've got a lower high here. So we've got 0.1. We've got 0.2. So then we go down, and what happens next? We make a lower low. So now we're understanding that on a short term, in a 1 hour, we've got a downtrend that's forming. Lower low, lower high, lower low, lower high, lower low. We're coming back. And what are we potentially doing here? As long as price on the 1 hour time frame stays below this lower high, this 1 hour trend that we can see in front of us, this 1 hour trend is intact. It's moving downwards. So we've got 0.1, we've got 0.2, so we've identified that, and we're going to be looking at potentially taking a short trade on 0.3. What do we now know here because of market structure? We know that anywhere between this trend line and this last lower high is a potential for price to come up to. So price breaks up higher, like on a lower time frame, because we're looking at a 1 hour trend here. People watching this on the 15-minute chart that we can see here, when the price broke up higher, they would have been looking at taking a buy here. And quite quickly, price would have reversed and stopped them out for a loss. Because we understand market structure, that anywhere in this area, price can still stay below this lower high here. You can either make an equal lower high, or it can make a new lower high, which it's done here. And it can still move to the downside. Go back to the 1 hour, we'll go to the 4 hour for a minute. It looks quite messy, but then couple that with purely everything. It may take some time because there's a lot of information here, but purely by if you go over lesson 1, 2, and 3 again and again and again, and this stuff resonates with you and you understand and you practice, there's enough here to become a successful trader. Because here, you understand, you've broken this trend line support here. So we never sell here. You never sell here because this is fear of missing out. This is where I'm sure, as I said, many people who have been trading for quite some time, I remember when I first started trading, you just want to make money. You just want to get into a trade. So when price breaks and it breaks strong with a strong candle like this and like this, you think that if you don't jump in now, that this thing is just going to dump and push down, and you're going to miss out on the chance because you've been watching this. You're going to miss out on your chance. But what happens is you press sell here and the market just flips the other way. You're probably thinking, why does this always happen to me? Why is it every time I take a trade I lose, or the market goes in the opposite way? Because you don't understand market structure. Here, you never take a sell trade. You need to have that self-control. When price breaks a trend line, it must come back and hit and retest as resistance. Here, we've retested as resistance here. Once, twice. This is screaming to take a short trade. But then if you couple that up with understanding market structure, you would have identified that you've got a lower low, a lower high, a lower low, a lower high, a lower low. This is the third point. If we could come up here, so there's so many confluences here. We've got the third touch, 1, 2, 3. So that's one confluence. We got the fact that we're staying underneath the last lower high. That's a second confluence. And then you've got the break of the 4-hour trend line, which was the outer trend line. And it's coming back to retest that. So it's a break of a strong support, and it's retested now a strong resistance. That's a third confluence. And then there's more here, which we're going to get to in the future when we start looking at things like Fibonacci, which add a fourth and a fifth confluence, which means more confidence for you to take that trade and take a short trade. And then you take a trade here, bang, your stop loss only needs to be above the last lower high, price moves down, and you're in profit, and you're making great profits, great trades, and you're a happy trader. Then this moves out now. This will have to move for next week, so this becomes the last lower high on the 1 hour time frame. We take this away, but just mark it all up, guys. Practice on multiple different pairs. Practice the market structure. See how well price respects it. You don't have to trade it straight away. Just test it all out and see what happens and see how it works. Now the next thing that we're going to be interested in watching is how price reacts to this level. Price sticks below this level, this 1 hour trend can continue. So we might see price come back to this, make a third touch. This third touch, we understand that when you get to that third touch, that price has all of this area to potentially come up to, and still this 1 hour trend could still be intact, and we might see a push down. But that's for next week, and we'll see where we left off with that next time. But that's the 1 hour trend. We'll see the overall trend. We can now follow it up with this more on the next episode on lesson number 4. We can look at this scenario and see how it played out in real-time analysis. So that, guys, I don't know how long this has been, an hour and a half and maybe more, is really breaking down the basics of market structure. I hope that helps. I hope you understand. Please leave a comment if you like it. Leave us a comment if you've got any questions. Like our video, subscribe for more. What we've done here in 3 lessons on the basics of Forex, and we're not even into the more complicated stuff. This here, if you take this and use it and practice it, you can see you can make money in the market time and time and time again. So many of you have come back to us on with your feedback about lesson 3 on our Instagram page. So this is our Instagram page, Innovation Market. Loads of you have sent us DMs, direct messages, telling us about lesson number 1, lesson number 2, how much you love it, how much it's changed your trading. So please give us your feedback. Go and follow us on Instagram as well if you're not already. That is our page and my page here as well. And also our Twitter page as well for Innovation Markets, where we give out lots of updates. So go and follow us there, guys. I hope that helps. As I said, leave comments, let us know your feedback, and yeah, we look forward to lesson number 4, where we're going to be going into even more detail. But I'm sure there's a lot there for you guys to take on there. Lots of notes to make, lots of back testing, lots of practicing, and yeah, let us know how it helps you and how much it changes your trading. That's what we want for you guys. Free course here to help you and change your lives, change your trading, make you better traders, and also to just help you understand how simplicity is key. So on that note, thank you guys. We'll see you for lesson number 4.